The S&P 500 is looking pretty bullish, and I want to talk about motivation. Hi, this is Tim from TradingStrategyGuides.com. Today, I'll talk about motivation versus discipline. What's the difference? Well, you're about to find out. Also, leave comments on the subjects you want me to do training on. What do you have trouble with? Psychology, entries, exits, rules, trade plans? Let me know. Okay, I'll talk about motivation, discipline, open trades, factoid of the day, the S&P setup. Then I'll burn the questions of the universe. Wait, that's not right. Anyway, I got my coffee, and away we go. Remember to click that big old red subscribe button down below and hit that bell so you don't miss any of our trading goodness. All right, open trade time. Well, the US dollar Japanese yen hit our target right there and then popped right up here and hit the stop on the second half. So we're done with the dollar yen for right now. Okay, Bitcoin dropped below the original range right here. This was the original range line. But the volume was insufficient to trade it, so we didn't take that trade. And I mentioned that I would consider moving this line. Well, I've considered it, and the volume is dropping and the volatility is continuing to drop, so I have redrawn the line here at 77.95, and it looks like today we may get a trigger on the upside right here, so be sure to watch this at the end of the day. And the story is kind of the same on the Ethereum. We closed this for a tiny profit somewhere in here, and I've been watching this. The volume has continued to drop, volatility has continued to drop, so I redrew this triangle right here and right here. Looks like it's breaking above it, but like I mentioned, I'm not willing to go long out of this triangle because it's so close to the bottom of this other range. Looks like it could be stalling up near that range right here. If it closes below the triangle right here, I will go short, as long as we got sufficient volume on it. And you guys know the story about the volume. If you don't, I'll be talking about it shortly on our S&P trade. Okay, this is American Micro Devices. I moved this line down to 27.40 because this wick came down and kind of corresponded with that candle right there. So I like this level better. So watch 27.40 for a close to go short. All right, gang, it's factoid time. You guys probably know that I have great respect for Tesla's Elon Musk. Well, someone who ranks right up there with Elon, in my opinion, is Virgin's Richard Branson. In fact, I think these guys in the same thought most of the time. I just love the technology these guys are responsible for. And here's today's interesting news nugget. Branson's Virgin Galactic and Musk's SpaceX are going head-to-head in the space tourism business, and it appears that Boeing is casting their lot with Virgin Galactic by investing $20 million for a minority stake in the company. Of course, in space travel, $20 million won't go too far, but the investment is just a start on a partnership with Virgin Galactic that will hopefully result in a commercially viable hypersonic jet. For those of you who are behind the tech times, which included me before researching this factoid, hypersonic means traveling at 5 times the speed of sound or faster. In other words, Virgin Galactic wants to take you from LA to Tokyo in like 2 hours instead of the current 11-hour trip. Both Boeing and Virgin Galactic are planning to launch commercial space flights next year, so get ready to don your spacesuit. I mean, if you're really rich and all. But if you're not and you want to get in on this craze, Virgin Galactic wants to go public this year on the New York Stock Exchange. If that happens, they'll be the first public company for human spaceflight. Take that, SpaceX. Hat tip to the Morning Brew for this news nugget. I'll include all the links below. And on that note, let's take a look at the S&P 500. Okay, this is kind of an immature ascending triangle on the S&P 500 right here. An ascending triangle consists of a strong resistance level, which we have right here at 30.25, attacked here several times and here several times, with a series of higher lows that keep popping up and putting pressure on the resistance levels. So we've got all of these higher lows right here, and each time they keep popping up and hitting that resistance level. I like to think of it as like a trip hammer. Every time this pops up, it damages this and eats up some more of the sell orders that are sitting at that level. Now, I call this immature because typically an ascending triangle, or any triangle, breaks somewhere around the 2/3 to 3/4 level, like so. Somewhere in here is typically where we would expect it to break out. So we may be watching this thing until late 2019 or early 2020 before we get a trigger. Or it could trigger tomorrow. You never know. I will only take a long trigger on an ascending triangle on a close above this resistance at 30.25. Plus, another thing I like to look for is a decline in the volume and a decline in the volatility. And of course, I measure the volatility using the ATR, or the average true range, which is simply an average of the length of the last 14 candles. So here's our trade plan. We will buy a daily close above the triangle, or above 30.25. On the breaking candle, to enter a full-size position, we want to make sure that the volume bar reaches all the way up to the volume average. If it doesn't quite reach the volume average, but does reach at least 75% of the average, I'll take a half-size position to reduce risk. You can calculate that percentage by taking the volume, dividing it by the volume average, and you should get at least 0.75. If you don't get at least 0.75, stand aside, let the trade go on by. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So on the breaking candle, take a look at the average true range right here, multiply it by 1.5, and you will put that stop loss, that distance, below the entry, not below the resistance level. And of course, the first target will be 1 ATR above the entry. If, after entering the trade, candle closes back inside the range, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut that trade down without taking a full stop if possible. When our price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, typically I use 2 positions to do this. The first position has a hard stop loss and a hard take profit at the appropriate prices, and the second position will have a hard stop loss and no take profit directly associated with it. I also only risk about 2% of my account on each trade. No single trade should make or break you. And that is the S&P 500 setup for today. Okay, let's talk about motivation and discipline. Here you go. I'm going to talk about trading psychology once again this week. This will be a little more esoteric than the risk management discussion last week. This week I'm going to talk about motivation versus discipline. I'll keep it short. Hopefully you'll still be awake when I'm done. For starters, does anyone know the difference? Anyone? Bueller? Okay, here are the short definitions. Motivation is the reason for people's action, willingness, and goals. They can be wants or desires, but they typically lead to a certain behavior that will accomplish those wants or desires. Your motivation for working out and eating right might be so you can live forever. Your motivation for being a successful trader may be so you can pay your kids' or grandkids' way to college or some other such thing. Now, discipline, on the other hand, is action regulating your behavior. So maybe you have a motivation to work out. Discipline is what gets your butt out of the recliner and headed to the gym. You don't have to have motivation to do that every day, but you do have to have discipline. Now, typically the motivation comes first, but the follow-through is always accomplished by discipline. You can't stay motivated all the time. Now, I know you've probably heard that it takes 3 weeks to form a habit. After you do something for 3 weeks, it will become second nature and you'll have to think less about it. I find that to be accurate in my life, but I also find that I have to make that decision every single day. I think my initial motivation to do something may carry me through the first 3 weeks, but it still takes that discipline to decide to go to the gym every day. But we're all different. I know that I tend to be a bit on the OCD side. I mean, you can move the picture on the wall and make it crooked, and I won't have the insatiable need to jump up and straighten it or anything. I'm not, that OCD. But I am definitely a rules guy. If there are rules for something, I find it hard not to follow those rules, particularly if they're my own rules. That makes the discipline thing a bit easier for me. But I still have to have systems in place to be sure that I know in a timely manner what rule I'm supposed to be following. One of the mechanisms I often use is alarms on my phone. In fact, you may have just heard one. I use certain alarm sounds for certain events, and then I'm kind of just like Pavlov's dogs. I just automatically go do what I'm supposed to do when I hear that sound. Now, I've said all that to say something maybe you've heard here before. Discipline is better than motivation. But you can definitely use motivation to improve your discipline. If you have discipline problems, think about the things that motivated you to start with. So here are your action points. Number 1, figure out your why. What is your motivation? What reasons do you have to do what you need to do? Is it your family, your health, whatever? Write them down. Did I say write them down? Yes, write them down. Number 2, use that motivation list to set up discipline mechanisms. While you've got that motivation in mind, start setting up mechanisms to be sure you will do the things you need to do. Make a list of the steps you need to take to get where you want to go. Start setting up the mechanisms that will keep you focused on your goal. Set alarms for when you need to do things like getting out of bed or going to the gym. Find positive people around you and tell them what you're doing. I'm not talking about yes men here. You'll want some hype people, of course, that support you no matter what. But you also need some people around you that you can trust to be realistic about your plan. I'm not talking about negative Nancys that will hate everything you're doing. I'm talking about people with constructive criticism, people that care about you, people that you can listen to without getting offended. Number 3, act on your mechanisms. Your discipline mechanisms are useless if you don't act on them. If one of your peeps tells you to do something, then do it. One of the commitments I made when I started at CrossFit 17 months ago is I told myself that I would immediately do absolutely everything the coaches told me to do, without complaint or question. Well, I can't say that I exactly followed through on all of that because sometimes I catch myself complaining. But I work hard not to complain at all. If you set an alarm while you're still motivated, get up immediately and go do what you should do. In a few weeks, that sound will remind you of what you need to do. I mean, we really did learn something from Pavlov's experiments, right? Number 4, live a better life. This is not a rule so much as Life is so much better when you're disciplined. I'm not saying crap's not going to happen. It definitely happens. But don't freak out. Just amend your plan to cover the crap. Or pick it up. Make sure you have a poop bag with you at all times. I mean, in other words, try to anticipate and be prepared for the crap. Okay? Straight up from an old guy, I wish I knew this stuff when I was 18. I was an undisciplined mess with no work ethic. My life would have been so much easier if I'd understood some of these things when I was younger. And there you go. There's nothing better than old guy advice. That's something else I wish I knew when I was a kid, because I would have listened to my dad more. Okay, and here's one of my main discipline mechanisms, the trading maxims, which is kind of a misnomer. It should probably be the living life maxims or something. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. I get these maxims from anywhere and everywhere, including a few that I've written myself. Purpose of my maxims is to motivate me to discipline. Motivation is a good start, but discipline is what keeps you going during the tough times. I believe you've heard that somewhere before, right? I suggest you start your own list of maxims to help in your trading and your life. Feel free to borrow from my list. All right, back to the archives once again today. Trading maxim number 33. A sequence of anecdotes is not data. So, what is an anecdote, you may ask? Did you actually ask that? Well, I'm assuming someone did. An anecdote is a brief, revealing account of an individual person or an incident. And how does that apply to trading? Okay, well, let's say I sell some Bitcoin and it starts flying up and stops me out. And then someone tells me that every time they've sold Bitcoin, they've lost money. And then someone else tells me, well, every time I've sold Bitcoin, I've lost money. So because of all that data, I say I'm never going to sell Bitcoin again. Is that the right thing to do? Well, of course not. Just because you and me and a couple of other people lost money selling Bitcoin doesn't mean that every time you sell Bitcoin, it's going to go up. That is what is known as anecdotal evidence. Data, on the other hand, is an not that data. That data, on the other hand, is a series of tests of a strategy to sell Bitcoin and the results of the series of tests. Does it support your anecdotal evidence? Who cares? Because anecdotal evidence is useless in trading and most other scientific pursuits. It probably has its place somewhere, but not in trading, because anecdotal evidence rarely has a large enough sample size to have any statistical significance. And that's what trading's all about, probabilities, right? So be sure you thoroughly test your strategies on real charts and bump that whole "I'll never take a trade at 2 p.m. on Monday because I lost money that one time." That stuff just doesn't work. Remember our S&P 500 trade plan. We're going to buy a daily close above the ascending triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to check out the trade management video for more details. The link will be below. And go sign up for my free Trading Picks email list to be sure you don't miss any of my picks. I'll be sending out 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll see them first. And the best thing is, it's free. I'll put the link below the video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or two on each one, and maybe some extra Q&A or training on Wednesdays. And please ask me some questions. I want to answer some questions, but I don't have any more questions to ask, so you guys need to ask them. I try to answer them quickly, and the only stupid question is the unasked one. Let me know what's bugging you about your trading. I'll be glad to explain anything I possibly can. Just let me know what you're thinking. Also, follow me on Twitter. Twitter link is below. Tell your friends about us. Help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great remainder of your week, and I'll see you next time.